Hello everyone. I hope you all are safe and healthy. This is the second part of our chapter number 1, Introduction to Partnership. Now let us see what is capital accounts of partners. When you are starting with any kind of business, you need to bring the capital to run the business. Okay. So when the partners are bringing their capital, that should be mentioned in their particular capital accounts. Okay. Let us see. A capital accounts of each partner is prepared in the books of partnership firm. That means in the partnership firm, we have to enter the capitals which is brought by the each of the partners, and to record the individual transaction done by the partners with the partnership firm. That means any of the individual work is done by the partners, that is going to be mentioned in the capital accounts of the partners. Okay, when you are bringing your initial capitals, when you are introducing it, then it is going to be added, or it is going to be written on the credit side of the capital accounts. On which side? On credit side. But when there is any kind of transaction which will reduce the capital of the business, then it is going to be written on the debit side of the capital accounts. So basically there are two methods to maintain that. First is fluctuating capital method, and second, that is fixed capital method. So what is the difference between these two? The fluctuating method has difference between the opening balance and the closing balance of the partner's capital account. But when there is a fixed capital account method, the opening and the closing balance will be same in their particular accounts. So let's start with the first one, that is fluctuating capital account method. So in which opening balance of the capital account and the closing balance of the capital account will be reported fluctuated. That means flexible. It means any of the partner is bringing the capital, or some of the reason they were withdrawing their capitals. So that is going to be written as per the fluctuating capital accounts method. This is also known as temporary capital account method. So this is flexible in nature when there is we are using fluctuating capital account method. So under this method, what we are doing, we are recording all the transaction related to the partners only in one particular capital account. In only one account we are going to mention everything. So this is the performa of partners capital account as per the fluctuating capital account method. So let's see on the credit side balance. Okay, by bringing this all this, now start with the first one, that is by balance brought down. When you have started a business, you have brought some capital and you are transferring it, and at the end of the year, so starting of the year you are bringing that back. This will be called as balance brought down. So this is the opening credit balance of particular capital account. So opening balance is going to be written on the credit side of the partners capital account. Then any of the cash or bank which is brought by the partners, that is going to be mentioned over here. See, these are the names of the partners: partner number A, partner B. And if you are paying any of the salaries to the partners, any of the bonuses, any of the commission, or any of the remuneration to the partners, that should be written over here. Now if there is any kind of withdrawal, then it is going to be written over here to the withdrawals account. I hope you have understood this. So all the withdrawals are going to be written over here. Same way, any of the interest on drawings, if you are paying to the partners, that should be mentioned in the partners capital account debit side. Okay. Then the appropriate profit and appropriate loss is going to be mentioned. So the by the profit and loss appropriation account, which is a divisible profit, is it is going to be written over here, and if it is loss, then it is going to be written over here. And whichever side the total is higher, we were transferring the rest of the side's balance to the next year, and that is going to be shown like this. Closing balance of the capital account is going to be transferred for the next year in particular partners capital accounts. Okay, so this is about the fluctuating account capital method. This is the second one, that is fixed capital account method. Okay, so fixed, that means the opening balance and the closing balance of the partners will be fixed, will be the same. There will be no any kind of difference. So particularly for that, we have to prepare two accounts, one that is partners capital account and second that is partners current account. Let's see in detail what is called as partners capital account. Whatever the balance is in the beginning of the year, that is going to be written on the credit side, which was same as per the particular fluctuating capital method. So that is going to be written on the credit side of the partners capital account. This is partner A, this is partner B. Then any of the additional capital is brought by the partners, that is going to be shown over here. That means only it is the transaction related with the capital only, nothing else. Then on a debit side, if there is any kind of withdrawals, that is going to be written on the partners capital's debit side. Then it is going to be shown partner A, partner B and the amount, and rest of the balance will be transferred for the next year. So in this particular account, partners capital account, as per the fixed capital method, this is the fixed capital account method, the balance brought down at the opening of the year and balance carried down at the close of the year will be same. This will be same. These both are same. Okay. Now starting with the next one, that is partners current account. Over here what we are doing, we are transferring the balance to the current accounts and rest of the work will be the same, which was we have discussed in the previous two slides. That means by interest on that particular credit account, if we are paying any of that on a current account, that is going to be mentioned over here. Salary, bonus, commission, remuneration, that will be credited to that particular accounts. Then any of the drawing is made by the partners, that will be debited, and any of the interest is paid by the paid on the drawings, that is should be mentioned over here. Same way the balance will be transferred to the next year. So basically this is the most important question for the particular chapter, that what is the difference between fixed capital account method and fluctuating capital account method. Okay, so this is 3 marks question. You have to remember this is the most IMP question. In many of the board examination this question is asked. Okay, now see points of difference, that means the major title. Starting with the meaning of fixed capital account method. If you have seen that the fixed capital account method, where the opening balance of the capital and the closing balance will not change, that is unchanged, that means same. So that is called as fixed one. Where in the fluctuating method, this will be flexible in nature and it is also known as temporary capital account method. Okay, so in this one the balance of capital will be same, partners capital account, and the balance of the partners capital account will be fluctuating. Then here accounts, which kind of accounts you need to prepare when there is a fixed capital method account, then you have to prepare the capital account as well as current account. But when it is fluctuating capital method account, then you have to prepare only one account, that is capital account at the open in the books of the firm. So that means here you have to prepare only one account, that is fluctuating capital method account, and here you have to prepare two accounts, one that is capital account, then second is partners current account. Then what will be the treatment for the transactions? So in capital account we will only insert the data related with the capitals, okay, and rest of the transaction are going to be written in the current accounts. But when it is fluctuating capital method account, all the data related with the capital and all the data related with the capital accounts of the particular partners, this going to be written in this particular method. Then interest on capital. So generally the amount of capital remains unchanged, so that's why the remains interest on capital will remains constant. Okay, if you know that the opening balance and the closing balance of these accounts are same, okay, the capital will be same, so interest on capital remains constant at every year. This is followed generally, but this will kept on changing. So the fluctuating capital account method, the rate of interest will be the interest on the capital is going to be changed, and every year it is going to be changed. You have to consecutively make the entry in this. Then bank balance of accounts. So the balance of fixed capital account is always credit balance. This is always credit balance. But when it comes to the current accounts, then there can't be any situation whether it is debit balance or the credit balance. But when it comes to the fluctuating capital account method, normally it is credit balance. Normally the chances are higher for the credit balance, but under this method there can be debit balance of the capital account. So it can be changed as per the change in the capitals. And last one, that is treatment in the balance sheet. Since the fixed capital account has the credit balance, that will be directly shown in the capital liability side as their capital. And if the current account has the credit balance, it will be shown on the capital liability side. Or if it is a debit balance, then it is going to be shown on the asset side. But when here, if the capital has a credit balance, it will be shown on the capital liability side, and the balance sheet debit balance of the asset side. So I hope you have seen the video. I hope you have understood everything. If you have any kind of doubt, just write down on the comment section. Please like, share and subscribe to the channel. Thank you very much. Jai Hind.